But when you're looking at the sectors out there, let's take a look at them one by one. We'll talk about the growth sectors first. When you're looking at technology, another 10-point downgrade, currently ranked at 25. Obviously, that would be even a bigger downgrade if you saw kind of what today was going to happen. You see the violation. Again, when you're looking at the tech sector, we're looking at this 150 by 150 level, old support over here, a lot of chop over there at 150. Can it act as support? Don't know. We need to see it really kind of form in the market and then see it start to form in the sectors. You see the gap down, that's based on the futures price. Not a lot of buying here, just sell, 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 sell on a fade type action. Technology definitely needs to see support coming in. Right now, we just simply have not seen it. When you're looking at its twin sister, the communication sector, very similar. You see the gap down, sell down type scenario. In the communication sector, you see a very similar violation of the 50-day moving average here. The communication sector is ranked very similar to the technology sector right there at the 25 handle. Would have got a little bit of a bigger downgrade. Again, we didn't see that on Friday. You're hugging the 50. We downgrade because of the weakness. You would see an additional downgrade with the violation here today. When you're looking at the discretionary scenario, obviously we were looking at that 185, 185, 60 level as a potential breakout. Loved that breakout. That got snuffed out. Just simply put, that got snuffed out here today. Violation of all your moving averages. It now needs to reset the entire trend in my opinion. And so you could see support coming in right now. You could see it right down around 175. Don't know. Once again, you're looking at a gap down, sell down scenario as you gap down underneath the 181 support level, and then you sell down. Got to see that volatility subside a little bit in the discretionary space. And again, a lot of this is going to be coupled with those major news stories and getting a little bit of clarity on those major storylines that are happening here today. What is interesting in these sectors is, for me, and again, a lot of bullish trades triggers just got blown out of the water today. But for me, when these environments hit, it's about reassessing the situation, updating certain triggers, looking at those watch lists to see if they still held their trend, held their pattern. You take an example like Netflix in the communication space here. Netflix down big on the day the same way everything else is down big on the day, down about 2.5%. But it's not down relatively more than anything else is in the market. You're testing support. The question on Netflix that I personally have is, does today blow up that trend that has been developing over the course of the last month and a half with good momentum behind it? And you know what? It may come down into the 560 level. No doubt that would blow this up, but we don't know yet. You see that big movement to the downside, but technically I wouldn't say that is confirmed a violation of support. If we recover, I still think that lines up the next Netflix trade. And so with Netflix, just as an example here, you got to still like the momentum behind the trend. You got to like support around 575 building. You just don't like what's happening here today as you see not really a gap down, guys. Tried to test going up on the open, came down, and now you're fighting for that 575 support level. And so for me, if 575 holds on Netflix, for example, I still think this trade is a legitimate trade, but it starts with it holding. When you take a look at ADI, another example from the I believe it was on the options report this past weekend. When you're looking at ADI, we were looking at this as a potential breakout. When you look at it on the weekly chart, you see that nice consolidation at the top end of the channel. We're looking at as a potential breakout. Now, I think what you do is you update this to a front-running bullish retracement. So when you're looking at this from a build, you see that cluster of moving averages start to form between the rising 20 and the 50. You see this as a higher high in the short term, and you're looking at this as a potential support build. Again, you got to see it happen. But I think that's the protocol you go through, is you go through those watch lists and you have a conversation with yourself. What violated trend and pattern? Simply because you have a sell in the market doesn't mean trends and patterns were violated. Markets go up and down. Obviously, with a day like today where the market violates support, you're going to see a lot of sectors violate support. You're going to see a lot of stocks violate support as well. But you're also going to see scenarios like ADI that simply form a bullish retracement where you need a doji. You're going to see scenarios like Netflix where it causes some concern, but it hasn't technically violated support. Could it? Absolutely. Could it in the next 10 minutes? Absolutely. But it hasn't technically violated support as you're in that zone. And so it's more about the update. When you're looking at discretionary, yeah, discretionary is garbage now, right? Violation of everything. But I'm still looking at a Six Flags. I kind of like those reopening plays. Airlines, they held up really well today. Some of the
Yeah, they did.
underbelly held up fairly decently today. You take a look at Six Flags here, a stock on our option report over the or on our stock report over the weekend. Did it violate the trend and pattern? No, the market did. Six Flags didn't. We're still looking at that potential continuation breakout against the symmetrical triangle with the trigger above 43. And so I think what happens is you simply go through your watch list very methodically, you update it from a trend and a pattern perspective, and you reassess the situation. When you're looking at the more cyclical areas of the market, such as energy, basic materials, finance, and industrials, obviously you saw a couple downgrades out of basic materials and industrial. Both of them ranked left of 50 at tackle trading. When we're looking at the industrial sector, they got a negative 45 ranking right now. But you know what? I don't even need to say it. What's everybody looking at today?
The 200 period moving average on the gap down is sitting right on it.
Everybody and their dog's looking at that. Could that act as a support level?
Yeah, it could. It's not there yet, but it can absolutely be a catalyst down there.
And has the momentum shifted against the market a little bit?
Well, it's only down. What are we down? 2% on this one? Yeah, a little bit.
Well, just look at the daily candle.
The price action.
It's a small candle. Make it simple. So you could certainly see buyers coming in from an industrial perspective at the 200, but again, you have a lot of volatility coming down into that 200-day moving average. It's one of those scenarios on the industrial where it's like, yeah, we certainly could see the 200-day historically being a really good buyer situation. The question is, has it historically been that buyer situation? When you're looking at the 200-day moving average, a lot of neutrality covered, bounce. I want to say the evidence is compelling, but you do have some of it to a certain degree. So yeah, all sell day, but could the 200-day moving average? That's a question I think will be answered this week. I'm very interested in that 200-day moving average and whether or not it does form support or not. But officially, big downgrade in the industrial sector over the weekend. Now you're looking at a negative 45 ranking. The open question in industrial, can that 200-day moving average hold? When you're looking at energy here, energy had one of those moments yet again where it could have violated that 50 handle. It didn't. It broke back down. You saw the pain. It broke back down. You need to reassess the situation. This is back down into neutrality of absolutely nothingness. But am I still looking at an EOG that gapped down after a big upward movement in price and is now kissing off support? Yeah, I think EOG is still in a scenario where you give it a couple days and you're looking at this from a support build perspective. So whereas EOG, we were looking at it from a continuation breakout scenario, things change. Update it. When you look at the picture now, you're looking at this as a bullish retracement. So we were looking at a trigger above 75.5. Now we're looking at the intraday levels start to form right there on the daily 50-day moving average, kissing up against an old breakout channel. That's compelling to me. That's interesting to me, but I think you got to see the selling stop first, right? And so I think you go through your watch list methodically and you simply update them from what maintain trend and pattern, what triggers need to be updated. What breakouts turned into retracements today. Retracements got blasted and no longer looking at retracements to a certain extent. When you're looking at some of the other sectors out there like basic materials. Basic materials, you've seen the downgrades over the last couple weeks of tackle trading. You also now looking at this as a violation of the 50, a violation of the 200. And again, volatility doesn't care about moving averages. That's why they hypothetically can become support. We're looking at those areas. Basic materials, gap down, sell down. Now you're just looking at where this pain can end in the material sector, but absolutely you're some degree of bearish in the material sector right now. When you're looking at specialty chemicals, when you're looking at those metal mining companies, when you're looking at copper today, all of them showing recent spouts and volatility and all violating some degree of intermediate to major support levels. That's a certain degree of stay away outside of some gold value hunting. But from a specialty chemical perspective, take Lynn Holdings, for example. We might like 300, but you got to see 300 really form here.
You're going to need
right?
to see a pattern development for sure.
You got to see it really form here. You're not buying the dip here. You're buying with confirmation. When you look at Sherwin-Williams, SHW, again, double top, double bottom, violation of moving averages. The top of the market's selling down a little bit. The bottom of the market kind of stabilizing a little bit from a materials perspective. When you take a look at copper, /HG from the actual copper, it tested the 200-day moving average. But let's take our darling, FCX. Copper's kissing the 200. FCX not kissing the 200. Look at that gap down, sell down. Now, question is, we all love FCX. We love doing covered calls on FCX. Obviously, you're locking down risk graphs in FCX. But could $30? And again, this is just an open question I have this week. We need a lot of answers from the market this week. But here's one of them. FCX, can $30 play a role yet again? I think it can. But you got to see it.
You have to see it.
You got to see it.
Yeah.
This is not a buy the dip. You have to see buyers come back in. And so we're looking at these zones where historically they did, but are they going to do it again? That's why you got to see it. So materials a little bit as a stay away right now until you start to see those buyers come in from, and again, I'm talking from a bullish perspective. And then we already talked about the Dow Jones from an industrial perspective, the industrial sector itself, official ranking right there at that negative 45 handle as well. And then when you look at the defensive sectors here very quickly, you take a look at the REITs, real estate here, little gap down, stabilization happening around 46. Gap down, but it didn't sell down. A lot of the market gapped and sold here today. Real estate trying to find that support level around 46, but keep an eye on that one. Again, got to see a little bit of confirmation. When you're looking at the utility space, kind of the cousin to the real estate space, that's just been garbage for the last 2.5 weeks. I don't see anything different on this chart today that I saw on Friday, that I saw last week, that I saw the week before. I'm just seeing the continuation of the recent volatility in the utility space. That's a stay away for me in the short term. And then the last two sectors you're looking at, healthcare as well as consumer staples. Consumer staples, double top, double bottom, violation of the 50, violation of 71, and then you see the sell down. Where could support form? You could see it at 70, but again, that's a hypothetical. You're really looking at the 69, which is slightly north of that 200-day moving average. That does coincide with some fairly decent support level. $69 does make some sense to see those buyers come in at that level. But for right now, staples, again, sell down, gap down, sell down. Got to be a little bit of a stay away from the bullish swing trading perspective until you start to see a key word this week for us, guys. A very key word for us this week, stabilization. That's what it starts with, stabilization. You got to see the volatility stabilize. You got to see stabilization come into the marketplace. And so you're like, if we start seeing that, word of the week at Tackle Trading, word of the week, stabilization. That's what everybody is waiting on. And again, stabilization, a little bit of the eye of the beholder. But for me, it is slowing momentum with support starting to build with consistent intraday analysis. That's what we're looking at to see this week. And we got a lot of news stories to go through this week. So it's going to be one of those weeks where it's like, all right, let's get going a little bit.
Mm-hmm. Show me that stabilization.
Patience.
I wrote it down. Word of the week,
stabilization.
I like it.
And right now we don't have any of it.
On a Monday morning.
Right now we don't have any of it.
No, it's
but
not.
That's what we're wanting to see. And again, for me, it's about where is those levels that we could see that stabilization come in, that support level start to build from an intraday. Can it be 70 on staples? I don't know. most likely the 200-day moving average here. But again, this is all about the hypothetical scenarios of where those support levels could build. And so when you're looking at this from here, I'll do something from a visual perspective. Okay, this is the areas on the chart where all of that could occur. That's your box.
Yeah.
That's your financial box.
Yep.
Okay. You guys ready?
Mm-hmm.
That's your real estate box.
That's a big box.
It's a big one.
It's a big one. Energy's got a nice little tight box.
Mm-hmm.
Look at that, 45. You could definitely see those buyers. Look at that over here. 45 got gobbled, guys. Got gobbled up. 45 did. I'm looking at that level. When you're looking at utilities, hold on. Let me get you an accurate box on this one. There. I think that should tell you my opinion of utilities.
Utilities, yes.
Okay. Okay. Again, just visually painting the picture here.
Mm-hmm.
Okay. Visually painting the picture here.
Materials are needing to hold.
Oh,
that
yeah.
sector, yeah. Got a little box, yeah.
No one.
Yeah. The rest of them are not there yet. That's the difference. Right. They're just not there yet.
Uh-huh.
This is the industrial sector. It's one of the first ones that if the market does stabilize this week, you are looking at the industrial sector on that 200-day moving average, in my opinion. Healthcare, guys, if 130 breaks, it could get ugly in healthcare. No doubt. Mm-hmm. If 130 violates, you could see some pain here. And again, support could build anytime, guys. And a lot of this, guys, is the market's been fairly good this year.
Yeah.
When the market goes up a lot and you start violating support, there's just not a lot there. And so we're looking at an environment where you simply have to see support come in. And honestly, I would love to give you a more accurate response than it could happen at any moment because it's going to happen on the intraday chart.
Mm-hmm. I love the analysis there, and that visual you just went through, I think, really does help us kind of understand exactly where these different sectors are. Going through them one at a time, Matt, was great there. Gino, by the way, who does the newsletter over at Tackle Trading each and every week. Gino, any thoughts on these market sectors before
I really enjoyed that, Matt. You summed up everything I could possibly say. On the newsletter, I pointed out a couple of things. There's certain sectors that really move the market and certain ones that don't, like materials and energy utilities don't really move the market, even if those sectors tank. So I track the ones looking for stabilization. Like you just did. What do you have on there? You have healthcare on there, right? So in the newsletter, just to sum it up, and Greg Holmesy and I, Old Money Holmes, we did a coaches show last Tuesday on what's considered a pullback versus bearish. And we're seeing a lot of charts that are bearish on the daily, but they're still looking good on the weekly. So when you look at healthcare, that doesn't look great on the daily. But when you look at the weekly, look at that. That's still intact. Like Matt said, that 130 20-day moving average is coming in right there.
And Gino, very quickly, that's why I drew it at 130, right? Yeah. You could definitely see support coming in at 130 on healthcare, 100%. Yeah. That's the zone I believe traders and investors are looking at in this sector at 130 because that 20 weekly is right there at 130 as well. And so that's why I drew the box at 130. If 130 holds, I think we're all good here. I think we're fine.
Key sector. It's a big part of the market. It's like 12% of the S&P.
It's a massive sector.
So the biggest one is XLK. Now, when I look at XLK, same thing. You saw it there. It looks like it's really pulling back in the daily, like it's going to go bearish, but there's still room to hit that 20 there. It's still a deep pull. I'm calling it a deep pullback. I do want to buy it when it gets back above the 20 on a daily. And then semiconductors, Tim, I don't know if you did SMH.
150 on tech, if you want to give it a number like we did on healthcare, 130 on healthcare, 150 on tech from a sector perspective.
And these are the key sectors that led the market up. Healthcare, tech, communications, semiconductors. and discretionary. If you put all those on there, they're all in the same weekly looking for support there.
Sure.
There's discretionary, you know. I'm looking at those. That's the main sectors I'm looking at for, like what you said, looking for a footing, looking to grab hold on.
Gotcha. Gotcha.
So yeah, excellent. That's the ones I'm looking at. Also, Tim, I wanted to point this out to you because you and I are crazy geeky option traders. I put this on this is interesting. I probably never see this hardly ever, but check out the VIX. Check out the VIX real quickly.
Let me guess, it's up.
Well, not only that,
Hold on. Let me guess, it's up over 20%.